Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Monday morning market webcast. Okay, so I zoomed out the daily chart this morning just because I really want you guys to get a sense of where we've been and where we're going. You know, they talk about, oh, this is a V, this is that. Look, guys, this is a V. I mean, it's on, you know, as we knock on the door of 2,900, I mean, we have to give credit where credit is due. They've really taken this thing up big time from Christmas Eve and the day after Christmas where they made the low. You know, we are at almost 600 handles and counting, pretty much straight up off the floor with one little dip job in early March that came down and held the 50-day and then back up. And you know, as I zoom in now, you can see we engaged the upper band on Friday. It's been taking a day off. Engage, do nothing. Engage, do nothing. Engage, and who the hell knows? That's today. I expect today to be a battle over the round number 2,900. Okay, you've got the new weekly pivot sitting down at 2880, and they have knocked on the door between Friday and Sunday night Globex. You know, this 98, 99 area up here, they pulled back off it. And I'll be interested to see what the hourly mid-band does here. It's tried to be resistance for the last couple of hours. Keeps making highs in the 94-ish area, 94 quarter. I'll be interested to see what happens when we get into the regular session. You can see the new weekly pivot down here. It's a Monday. I expect it to be whippy. I expect it to be choppy, at least off of the open. A lot of key stuff. 93 is that hourly mid-band. Volume weighted average price, VWAP is coming in at 93. So that's your battle zone. The bull's task is very simple. Start printing things with 29s on them and keep printing things with 29s on them. And over the course of the week, go and take on that continuation high up at 29.47. On the front month contract, on the June contract, that's 29.61 and change. So there's still a ways to go, but with us knocking on the door of 2,900, it's worth talking about the larger move, which has been pretty impressive. What do the Bears need to do? Well, they need to do something. They have no credibility at all above weekly pivot. None. For anything more than a quick trade and another dip to buy. I mean, we're back into that mode now. Okay? And, you know, one look at an hourly chart, one look at a daily chart, and you can see why. I mean, little dip and then forget it. They went and did, you know, they did 2790 up to 2900 without really a break. And this rally here, has been slow. It's been hated, and it's been a grind, but it's been very effective. So I cannot take the Bears seriously at all above 2880 because the first step to converting price to the downside on a sustained basis is having short-term tape control. Short-term tape control for me is who controls weekly pivot. They had their chance 2 weeks ago when they had the weekly pivot above them. Right back here, 2 weeks ago, they had weekly pivot above them, and then they blew it. They blew it here, they gapped up, and we never looked back. So until we start living below the orange line, I have very little confidence in the Bears' ability to execute anything more than a quick trade. So you can be short at times, but you have to be short taking profits and looking for where price is going to stall out to the downside, because when it does, those dip buyers are going to come right back in. All right, so everybody have a fantastic day. Join us over on Instagram at 920. Should be a very interesting week in the markets as we mess around with 2,900. Take care, trade them well. I'll talk to you soon. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade 'em well.